Before we begin, obviously the numbers you're seeing on screen now are going to be very different from like the previous analysis I've done, and that's because if you live under a rock, we have finally undergone the 4-for-1 stock split, meaning the price of the stock is now cut in 4, and for every share you used to have, now you have 4. So if we were 160 last week and you had 1 share, now we're at 40 and you have 4. It's like annoying whenever there's a split because like it throws off all of my charts, and I'll like link the Twitter post I showed, but like it's annoying just because I spent so much time making it all pretty, and it was like, what did I even do it for? This is log scale, right? It's kind of annoying. But anyways, let's dive into this. And I'm not gonna lie, I was kind of confused this whole move up. I'll kind of just, honestly, I'll probably just run you through like the Discord charts because that's where I do the most updating. If you're interested, link is in my Twitter bio. But actually, first and foremost, I'm gonna just show you guys what I have on screen here now. And so I have this, pretty cut and dry. But going deeper into it, right, I was really confused because for a while I've been trying to figure out like what this is, and for the longest time, right, I actually had, maybe it's in this one. Okay, yeah, we'll go with this. So this was my thinking a few weeks ago, and the difference between what you see here and this chart is before we were interpreting, you know, the move up to here as a big wave 1, and this was like the 2, which sets us up for, you know, the mega breakout. And now I don't think that's what we're looking at. And there's a few reasons to support this argument. I'm gonna kind of run you through everything. And just because, like, for the record, just because I'm bearish, that like doesn't mean I have a short position. I very rarely like won on GME puts, honestly, in my opinion. If you are trying to catch the short side exposure, you're much better off selling call spreads. The way this security is designed is like it's designed to take retailers' money. And you can see this through like the really more or less, like if I pull up like a 15-minute chart, right, all this chop with the spikes and the volatility right underneath the blue line of the volatility, all these spikes in the chop throughout the day, it just like kills option value. And there's like, you know, split moments where the prices will spike, but you know, unless you're actually trading, you know, the moves, and I don't have all the fib levels up right now, but unless you're actually trading the moves, like chances are you're gonna lose money. Like me, for example, last week I would play like bits and pieces of the moves up. I hate swinging in this market for one, and it was just a confusing structure. So I caught like little scalps here and there to like break us to the upside. But you know, there was like one play I tried to take right around this area. I'm not gonna dive too deep into it, but like I was in it for like 5 minutes, and I was in calls for next week, and within like 5 minutes of the price just being flat, I was down 20%. And I, you know, for like reasons like that, I don't really like to play this unless, you know, I'm buying at a critically defined low point and I can just sit on it and not care. And so that's what I'm going to be trying to show you guys today. So sorry, quick little rant. Going back to this, right, the key differences, or that the way I'm interpreting this now is that, I mean, this chart shows it enough, but basically, right, we have this whole sideways down corrected period from our January move, and then from the move after that. So we've been correcting the move after January, which is actually the March move, this entire time. And ever since we got our spike up, and when was this? In March, right? That marked the impulse out of that long-term correction. Which is cool, right? Now we're going up, but it doesn't just mean it's gonna shoot straight up. And so the supporting argument here is, well, for one, the subdivision. And I'll use think or swim, just so you can kind of see how this works. So, firstly, right, let's go to a smaller time frame and just visualize this first. Right, so look at the blue degree, 1, 2, and this whole move up to here is a 3, and that's divided into 5 in the green, right? 1, 2, 3, 4, 5. When I'm like plotting this out, I like will back test the ratios to see that it like makes sense what I'm looking at, and that's what kind of like gives me the thesis. It's not just like based off how it looks. Like there has to be like some underlying reason, like rhythm to the madness, I guess. And we're looking for a 1618 tick, or I guess higher. I guess this was 2618. Right, I'll put that joint on there, and okay, there's so the tick above, and then the retest and the fail. So this is significant, but whatever, right? And then finally, what we'll do is we'll go from the low of the 1 to the top of 3 down to the 4, and this should be a perfect 618 to 786. Perfect. And so because of that, If you don't know waves, this might be gibberish, but if you do, this is just a supporting argument to what you see on screen here. And then this is a 4 instead of a 2, meaning originally, if I go back to this, I actually assumed this would come a lot deeper, because in a wave 2, right, what you're expecting is a minimum 618 retrace of the entire move, and this only got 0.5, which, mind you, is like okay, but the way this is set up, right, this is kind of, I guess, sideways, but normally for a 2, right, instead of like having this bounce here, this should have come, you know, all the way down to like this level before we really shoot up. And if that had happened, I would be more confident in this being something more along the lines of something like this, yeah. And you can kind of see the difference right down here specifically. Whereas in this view, we were only expecting to come down to 120, which I guess is like 30 now, but I've changed that. And so I guess the price point that you're gonna be looking for is on the biggest scale possible. If this view is correct, we're gonna have to adjust this a little bit and bring it up to the high point. Actually, what's this tick? And you're gonna be looking at anything underneath this 27.45, technically, which might seem like a lot. This is just how the structure reads, though. And so, right, the other supporting argument for this is, you know, every major gap we've had, downside gap, I'll just go ahead and mark them back so you can kind of see how this plays out, right? Every like big downside gap we've had that we've left, that's not the gap, it's a little bit higher up, it's the close, not the tick. So like you'll see that like every big gap that we've had has literally been filled. And like here's another one here. Any that were on left that we came back for besides that? No, okay. You get the idea though. And so what's marked now are the, you know, the gaps that we have not filled. And the reason I'm really confident to move down to like 22.3, which again may be a stretch, we'll see. But you know, going back here to this move, the turn, so we had, this is a wave 1 and this whole part of the sequence was a 2 if I go back to there, right? Now what's really interesting is like we didn't have the turn to mark, you know, the beginning of this part of the sequence until we filled this gap here. And you'll notice this was our earnings day, and after hours we did tick lower, but this was not during RTH or regular trading hours. And so just something interesting to watch for. So that would put a most expected low, if you know GME stays true to filling gaps, at 22.29, and we would expect to see, you know, that hit within pennies and then an instant reversal. As to how long that'll take, I don't know. I would assume, you know, we kind of just slide slowly for the next week or two, but then later that basically sets up the rest of what you see on screen here. And there is like a method to the madness. Like if I were to like take the measurements, you'll see it's actually like it checks out for the most part. The 3 should be coming up to somewhere between, you know, 64 and 70, yada yada yada, you get the idea. But I still hold conviction in this, right? We're gonna, this used to be 350, which I guess is now like 75. I still hold conviction in like a triple top there before we really take off. And I guess, you know, when we get there, I'll dive deeper into that. But first, we want to see that like this part of the sequence plays out. We would expect, you know, more or less elongated sideways downward period, pretty similar to this move here, just on a smaller scale, because, you know, we're breaking up to the 3 in yellow, and that's going to happen in 5 waves, which are denoted by the orange degree. And so in my view, we've just had the first wave, which means we can expect a pretty serious sell wave before, you know, really ripping up. But this isn't just bullshit, so hear me out. Right now I'm gonna go to other tickers, mainly let's just go to SPY, SPX, whatever. 2 different interpretations, more or less the same thing, and we've been tracking this in Discord very, very closely, and, you know, playing the moves. And I guess there's 2, you know, possibilities that I'm eyeing. This is SPX, this is SPY. It's like slightly different, but more or less the same thing. Just ignore every color except the red right now. What we're looking at is an A, B, and a C. Now the C should extend up in 5 waves similar to here, 1, 2, 3, 4, 5. A, B, C, 1, 2, 3, 4, be it sideways or whatever fucking bullshit it is. Then the 5 up. And this would make, this completes an ABC. As to what unfolds from there, this is what I have. Will it go like this? I don't know. Because obviously, you know, I change this pretty constantly just based off what I see in the markets. But as of now, this is what I'm going with. And I could just really quickly, I'll show you the VIX chart too. We have lots of moves planned for this week and I'm very excited. So with the VIX, right, I have been tracking this ever since we were at like this part of the sequence. And going back and looking through all of these moves, I was able to predict that we would make a move up to here and then continue sliding. Which, you know, is saying that we should be longing the market. Just really quickly, so you guys know I'm not just like speaking out of my ass. It's been very helpful in, you know, gauging the direction of the market, and I think I've like passed over it, but I want to find like a really early view of it. I guess this is good enough. It goes, I started farther back, but I can't find it. But still, we've been working off of this, and this has been very, very helpful. And not necessarily only gauging GME, but you know, the broad market as a whole, whatever you want to say, you know, negative beta crowd, more or less they're gonna track. You know, the broad market and memes, GameStop, whatever, they're gonna track until they don't. And we simply don't really have any reason to expect this to just pop right now, at least in my opinion. You know, if we break above, you know, this level at 39.97, let's just call it 40, and the way this is drawn, right, we're looking at this as, right, the way this is drawn, if we have this as a 3 and this is a 4, this ratio is a wave 5 ratio. And right, this reaction to that level makes me think what I have drawn on screen here. That's about it. You know, bull case would be, I'm not even gonna draw it because I have like a picture of it, but it's pretty much what you've seen before. You know, would be kind of more or less like this, where we already have the top. This was actually pretty good. I'll give myself that one. That was pretty good. But yeah, I guess really quickly, bull case that was bouncing somewhere around this range, and if we're bearish, we should come down to here. But we probably will. You know, realistically speaking, we probably will. So take from that what you will. I'm not like the bearer of bad news. I'm just showing what I see unbiased. Or I don't have like a short position right now because again, I'd rather just short the market or long the VIX than short this. But hopefully you found that somewhat helpful. Basically, this is the view we're looking at, and we should, you know, break down in like an ABC fashion. So something like that, right? It's all I'm really looking for. So bear case be kind of like that, and the bull case kind of, I guess, A, B, C down to like here before we move up. We'll see, time will tell. I think the market's about to see a pretty strong downturn, and that doesn't usually bode well for GME. So just my 2 cents. If you found this enjoyable or useful, which you probably didn't, but if you did, I appreciate you for tuning in. Guess we'll see what happens. Yeah, cool. Till next time.